morning, all. I'm Epstein with your morning flash update, and this update is for the morning of now, Friday, and we're at the 5th of January, 2024. Time, right now about 8:10 a.m. Central Time. So as we look at the markets, already wild action. Just take a look at gold. 2055 to 2030, and you're only down $3 now. Silver, you went 40 cents on a range, 400-point range in the copper. Now I'm bringing you up to something going on. In the dollar index, you surged to 102.83. You've sunk back to being up just 23 points. Most of the currencies are down, but they're well off the morning lows. 58 points or 54 points now off the low in the euro. British pound coming back about 50 points. So what went on? This all has to do with the U.S. jobs report that came out this morning. We are getting more of a rally also in energy. Talk about that in a minute here too. And if you take a look at interest rates, you're back to 4.1% this morning on the 10-year from a 3.83 beginning of the week. Now, before I get too far and get into the report, and I'll do that right after this, this is the formal last day of our sale for 2024. 40% off my yearly research. Again, any new subscriber, you go to the yearly research, buy any of the products, 40% off. Existing monthly subscribers can upgrade to the 1 year to do the same thing. You go to irapstein.com under the word research. You'll see the regular prices there. Be sure you've got your button that moves over to the right for the yearly. You'll see that. When you put in your credit card info and everything to buy, it will absolutely give you the 40 off. You can move your cursor to the top up here. There'll be an icon. It'll take you right to that section as well. Okay? All right. So let's go take a look, if we could now, at what we've got going on. This is important. I'm going to drop you down to something. Before I get to the headline number, follow me. Hourly earnings are still going up. This is not what the Fed wants to see. It was up 0.2 on a hourly basis year over year, and it was up 1/10 right here. So if you think that all the wage inflation's out of the market, the first thing, it's not. Number two, we got up to 216,000 jobs. I don't know any estimates that were that high. Just prior to the report, I saw 140,000 being touted on Bloomberg. Analysts were saying, in fact, it was asked of Meta, she was asking what she thought would be the number that you have to get down to for the Fed to really say, okay, it is time to get going. And she hit it on the head. She said, you've probably got to get down to 100,000 number, which isn't happening at this point. She thought the market was ahead of itself. This proves it. 216,000. And the unemployment rate, they expected at 3.8, it fell 1/10. So you've got completely full unemployment, okay? You don't get better than this in a work environment. In the non-farm payrolls, up 173. That's a bit less than you had. The government on an unemployment rate, 3.7. Okay, that's the November revised. I said that wrong. It was the private payrolls. My brain's going faster than the numbers. That was up 14,000. Government payrolls up 3,000. Now, keep your eye on government payrolls. If we get to where I think we're headed, which is a government shutdown, I don't see the Democrats and Republicans agreeing on a budget. I don't see the president giving the way to open the door to do what the Republicans want. He just wants more money to put on more people to process people, not stopping the border surge that's happening. That isn't going to fly with the Republicans. Labor participation. 625. It did slip a little bit, so that's something the Fed wants to see. Average hourly earnings ended up 15 cents. Now, we're going to get in a few minutes here the ISM supply management numbers. They're going to be important. We want to see what they're doing there. Factory data is going to come out at 9 o'clock as well, and those orders will be looked at in an interesting way. But today's all about a surprise, stronger jobs market. Now, a stronger jobs market, what does that mean? Well, the first thing it means, at least to me, is that the market got ahead of itself. Yet, so important, this big drop, you got to 37,500. You've just rallied off the low. I mean, this thing fell like a brick right back. So you took the stop orders, you smashed them. And I want to use that word very clearly. You smashed the job or the stops, and you've come right back. This isn't all that bad of action. What did the Fed tell us all the way through? There's going to be bumps in the road. They don't think it's going to be a straight line. They were dead right on that. Again, on the energy market, I'm confused as to why the market is back up other than there's got to be problems in the Red Sea. The fact that ISIS, for all purpose, took the claim and took Israel out of the equation with Iran took a certain amount of pressure off the region. But what I think is going to happen is the coalition of the U.S.-led coalition in the Red Sea has to, and there's going to be growing pressure on them from the economics of the whole world, that they have to get to the point where they can take out a low-risk Houthis. Okay, what the Houthis are doing is they've got the support of Iran. They're firing drones and they're firing missiles. They should be easy targets to take out. What's Yemen going to do about it? It's not Saudi Arabia attacking them. It's the coalition. Not much. Iran, I think they're trying to do their best to not get involved in direct fighting. Remember that warship? You haven't heard anything more about it. It hasn't had any confrontations that they put in the sea. But again, they put one there, and that's how they back up their surrogates. I think that makes all the sense in the world. Back and forth action still in Bitcoin as the trade doesn't know exactly what to do with that at this point in time. And that makes all the sense because as we approach the January 10th date, we find out what the stance is going to be out of the SEC on releasing all these different ETFs. As you can see in the dollar, by the end now, after the report, and believe me, that was wild action. I mean, this is wild action. The market settling back and going, okay, so we had a strong report. Was that it? And now the market pushes back. I'm going to write today about what this did to the probability of a March hike. I'm sorry, a March rate cut. I didn't mean hike. March rate cut. It was last night at a 62% probability. I did not look this morning, but I have to think it's closer to 50% or under now. Even money bet because this number came out so much stronger on the jobs report. Again, we have a January 30th and 31st FOMC meeting. We get a lot of CPI numbers that are coming, but this report is not, I want to repeat, not what traders that were building in for 6 or 7 rate cuts in 2024, what they wanted to see. I want to go on record. I think March is off the table. I think it's a question of down the road, not a March beginning of rate cuts. I'm Ira Epstein. I'll catch up with all of you over the weekend. We'll do our weekly edition. Remember to take advantage of the New Year sale, 40% off, iraepstein.com. And you go to the word research. You can click up here. There'll be an icon that'll take you right there as well. You have a great trading day. See you this weekend.